Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. We had a beautiful gap higher this morning in the markets, and then we saw selling pressure all day until about 2 o'clock in the afternoon. That selling pressure was relieved, but ultimately we do have a down day on the markets. The NASDAQ is staying up, but that's because of news on Apple. As we discussed yesterday, Apple was meeting at the White House and did pledge another $100 billion investment in the United States for developing their chips here in the US. But mainly, it's going to be a lot of components that go into their iPhones. But regardless, that total now is up to $600 billion investment, and that's going to help Apple get by tariffs in the near future. All right, guys, let's jump into the market summary board and see what's moving today. So you can see here the Dow Jones down 0.67%, NASDAQ basically flat, up 0.03%, S&P 500 now down 0.25%, U.S. oil continues falling lower, down 0.82%, and gold actually pushed up higher today. Nice push, up 0.9%, and Bitcoin, look at this, up $2,300, 2% on the day. Very nice push on that cryptocurrency. All right, guys. So next up, let's look at the S&P 500 heat map and see where everything else is panning out today. We've got Nvidia up 0.5%. Apple up 2.97%, AVGO up 0.53%, AMD, nice push here, and we'll take a look at that stock a little bit later, but that's up 5.57%. Microsoft down 1%, Meta down 1.4%, as well as Eli Lilly got slammed on earnings, down 14.2%. All right, so let's jump into the S&P 500. We see here with this price action, we're just continuing up at this angle. This is all still bearish consolidation. Remember this trend line I told you where we broke trend intraday? Well, we're still not getting back above that price action. Even with today's gap up, we're still selling off into that area. So let me take you into the 10-minute chart to kind of explain what happened today. You can see here, price action gapped up higher. We were trading in this range the first 30 minutes of the trading day, and then all of a sudden the selling took off. You can see here strong sell throughout the course of the day. Then it continued down lower just until after 2 o'clock. We're starting to lift up here at the very end of the day. But ultimately, what this tells me, folks, is that these are institutions that are dumping. We're gapping up, and then institutions are unloading these positions, getting out of these positions. A lot of stocks that have had good earnings really haven't held those earnings either. And it's very evident what's going on right here when we have continual gap ups, then sell-offs. That's not good for the duration of the market to continue moving higher. All right, so now let's look into the daily time frame. I'm going to zoom back in and then pull the charts out. Notice what I'm starting to see here on the charts. And one of our members highlighted this to us today. Before our fall in February, you notice what happened here. We had price action moving up. We gapped down. Then we put in this diagonal inclining pattern, and then gap down again, created almost that similar diagonal inclining pattern. Then the sell-off began. Look where we are now, folks. We have almost an identical pattern that's setting up to what happened right here, right before we really started selling off in the markets. Do I think we're going to have a big sell-off like this? No, I doubt that. However, this is looking very similar, and markets often like to repeat themselves. Patterns repeat themselves on the charts. That's what you'll find as a technical trader. That's why it's so valuable being a technical trader. Eliminate the emotions, eliminate the hype and all the news narratives that are going out there, and just study the charts. The charts are the truth, and they tell us what's likely going to happen in the future. And right here, when I see this little pattern developing and showing itself again, right when we're near the tops, right when I'm anticipating resistance in the markets, that's telling me we likely are going to start chopping sideways, potentially rolling over a little bit. First support on the daily chart there is at 61.46 on the SPX. Next up, we've got the Qs. Now, the Qs pushed up higher. As I said, Apple had a nice day today, did push up and remain about where it opened today. However, that did lift the QQQ up, as you see here, and price did get above this inclining trend line. Important to watch, though. Do we take this candle out before rolling over. We'll be watching this tomorrow closely, as well as on the beginning parts of next week. But be watching this big red candle. Big red candles on the charts usually control price moving forward. It will be very difficult for the Qs to get above this unless it does gap above this. We'll see trading action tomorrow to give us better insight. Here on the SMH, as I've mentioned just the other day, we've really just been chopping around this bottom portion of the inclining parallel channel. Today, you see, we tried to get above into that parallel channel, got rejected. And so far, we continue to get rejected at this area. If we do continue to poke above, and the more often we hit it, it weakens it. So we have a little bit of mixed signals here on the SMH. And remember, SMH is a leading indicator, right? So we're banging on this door. We're banging, we're banging, we're banging. Eventually, we're going to break through if we continue banging like this. But the S&P 500 is telling us a different story. So be paying attention to this divergence that's going on. SMH implying we're likely to break higher. We'll see price action on this, as that should guide us as to the next steps of the S&P 500. Next up, IWM. IWM did a great job recovering itself today, but geez, guys, this was a big red candle earlier on in the day. I'm very surprised to see it close above this declining trend line, the way price action was trading earlier today. Look at the very beginning of the day on the 10-minute chart here. This is a nasty sell-off here on the IWM. As I said, see, we're closing just above it. Post-market trading, we're trading slightly above there too. But man, that's just not a good sign. A gap and crap right there straight on the screen. Big sell-off. Wow. Incredible price action. All the while where it closes is the most important for technical analysis. And so far, this chart is still saved and is now trading above this declining trend line, which kicks the can into tomorrow. Be watching price action with this consolidation so tight on this declining trend line. We could very well break to the downside there. Next up, Bitcoin. As I said, Bitcoin did push up over 2% today. Great push on Bitcoin. In addition, notice it's running right into resistance right here on this declining trend line drawn out on the chart. So great move on Bitcoin. We'll watch to see if price action consolidates or gets rejected at this trend line later tonight. Ultimately, 8 o'clock at night is when Bitcoin closes for today. So watch when price action closes, if it closes above this trend line or below, as that will give us insight as to tomorrow's price action and potentially over the weekend. If we do move up higher, the top end of this parallel will be resistance at $120,857. If we move lower, I'm looking for Bitcoin to tag this declining trend line, roughly $108,000. Next up, gold. As I said, gold had a nice day today, up almost 1%, and it did close beneath or above this declining trend line right here. You can see we just barely poked above. So now that opens the door for gold to break out and move higher on the charts. First, we need a confirming move above this tomorrow. So tomorrow is critical for gold. Will we get a close above? Will we then reverse course and close right back beneath? And if we do, then that resets this whole pattern, and we'll need to then watch for another attempted breakout. So tomorrow is a really big trading day for gold, and we'll see where price action falls. Next up, silver. Silver had a great day today too. You can see pushing up, now testing the top end of this big red candle that you see here on the chart, looking like it's about to close right at the very top of that candle. So nonetheless, great move on silver. Very surprised too that we didn't get a little bit more of selling pressure, but that just shows you how many investors are willing to pile into gold, even though it's had this incredible run since the lows here in April, under $29. Next resistance will be up here on this inclining trend line, right at $39.66. Support, as you see, $36.58 will be minor support since we've already tagged it. But if we start breaking this area, next support is $34.86. Next up, U.S. oil. U.S. oil yesterday, you can see we did close the day at within this red candle range, but today now closes underneath this red candle range. That should then kickstart selling pressure to pull price on oil down here to the 59 or dollar range, which is this declining trend line. Now, keep in mind, folks, this price point and target changes over time since it's a dynamic trend line. It's declining, so the longer that time takes to get to it, the lower it will be on the charts. Roughly now, we're going to be looking around $59 for that target support for a potential bounce. Next up, we've got Nat Gas. Nat Gas really didn't do too much today. As you see, it really traded sideways, tried to push up higher and tag this next resistance at 322, but did not accomplish that feat. We'll see if we start chopping around, putting in bullish consolidation over the next couple of days. Then that would imply upside to the first resistance at 323, followed by 333 on the charts, with both of those trend lines as resistance. Next up, the 10-year yield. The 10-year yield you see here has really been pulling back on the chart. Great news for it as far as rates going down. Now you can see we're actually coming towards the end of this parallel, or the bottom end of this parallel. The support of that parallel is at 4.176. Be watching this area over the next couple of days to see if we actually do poke down beneath this parallel channel. And if I'll rewind the clock back out, you can see that this parallel channel has been encompassing the price action on the 10-year yield for quite a while, since 2022. So a break of this to the downside would be a significant move and something that is newsworthy. So we'll be watching this over the coming days. Next up, Apple. As I've said and discussed yesterday in yesterday's trading the close, and then today's trading the close, we want to revisit Apple. Apple's such a big company. You want to know what's going on with this. And so ultimately, yesterday we discussed that we have a declining trend line, in essence, a parallel with this. Also, this other declining trend line here, this parallel channel right now is where price action has been contained in Apple. And today is a perfect example of how technical analysis works. We had great news from Apple yesterday. They're potentially dodging 100% tariffs on their products because of moving and a lot of their investments, as well as manufacturing here in the United States. Making that commitment will help also, which I said, avoid the tariffs, but then the tariffs will be applied on their competitors. So that should put Apple in a great position to continue to sell their products in the near to midterm. All that good news, and we still didn't break out of this declining trend line. So watch price action tomorrow. There's two ways for us to break out of a declining trend line. One, gap above, or two, consolidate for several days and then break higher. So watch for a gap above tomorrow. If we don't get that, we're likely consolidating before we break out, as this is the third hit of this declining trend line, which typically is the strongest. So you can see here, price just really froze on Apple today. Just tried to get through, couldn't get through, pushed, and then got rejected. And then by the end of the day, just barely poked above that trend line. So ultimately, that trend line is still in the realm of resistance. We'll see where price action opens tomorrow to give us insight as to where Apple will go. Next up, Nvidia. Now, Nvidia, look at this parallel channel on Nvidia. And also notice this is a behemoth, right? This stock is just incredible. Moved up now, right now, 110% since the April lows. The stock really is on fire. However, look right here, guys. Now, this has been going on for a while, all right? So this is insider selling information that's displayed on the charts right now. And I want to highlight the fact that right here on June 2nd, CEO Jensen Huang planned to sell $800 million of Nvidia stock. So you can see each one of these transactions here. $35 million by Jensen Huang, another $35 million, $36 million, $37 million of shares sold, $38 million worth of shares sold. All the while, look at all of these huge scores for Jensen Huang as far as accumulating money, taking money off the table with this rapid move up with Nvidia. Now, he's not the only one that's doing the selling. As you see here, other executives within Nvidia are also selling. But one key feature that I always pay attention to whenever I'm analyzing insider selling is seeing how many remaining shares that individual has. So in this sell order, you see here, Jensen Huang sold 225,000 shares of Nvidia, right? Which is, hey, that's a hefty amount. However, if you look down here, following these transactions, Huang directly owns 73 million shares still, and indirectly owns 783 million shares. So while 225,000 shares being sold is definitely substantial, the guy still has a boatload of shares. Whenever this does raise flags for me, it's when the CEO or executives sell 60, 70, 80% of their shares. And really, Jensen Huang is just taking some off the table, but he's taking a substantial amount of money off the table now. And the reason he's doing so is look at that chart, guys. We not only have surpassed the recent all-time highs back here in 2024, we're up here near the high ends of this year of 2025. Why not take some money and take that profit when you can? Plus, he knows their business more than any one of us investors. And if all those executives are hitting the sell button, that tells me that this run on Nvidia is closer towards a pullback than another explosive move higher. Plus, the charts are telling me that too with this inclining parallel channel. So with Nvidia, it's like the Titanic. All right. This is a big company. When this starts selling off, it will be hard for it to not have buy the dippers buying it back up. So the first area of support where those dippers will likely come in is this gap fill here at $173.72, which likely will correspond with this inclining yellow trend line that you see here on the charts. But once that breaks, the next area of support is going to be down here on the 50% area of the parallel, roughly $164. Next up, we got APP. APP reported earnings today. Beautiful beat, 21% on EPS, and revenue up 2.81%. As you see, the stock reacted and pushed higher. But one thing I do want to point out, notice we were attempting to break out right here. We never confirmed until today. So finally, beautiful move up there for APP, making the confirming move that then now flips this declining trend line into support, which currently is around $366.63. If I scroll back out on the chart, you can see here where price action caught resistance on its rapid ascent today. And it was all because of this little candle and little wick all the way back here from February 13th. Notice that pivot low right there. I drew a trend line straight across the screen to highlight price action pierced that, then reverse course. And one of our traders, Benjamin Poole, made a great trade on APP for a day trade today, capitalizing another fantastic win for our members. So one of the areas he found resistance was simply a trend line like that. Technical analysis is really simple to do and easy to do once you know what you're looking for. If APP continues moving up higher in the near term, next resistance 488.14. As I said, support's going to be down here on this declining trend line. Next up, AMD. Now, AMD did not have earnings today. They had it just the other day, and they did fall off of earnings. But I highlighted AMD today to show you that big, incredible bounce that we're seeing here, up 5.69%. Now, that's not a 20% bounce. That's not a 10% bounce. But nonetheless, the reason it bounced right there was for two reasons. One, we had support at 157.48, but then other reason, and mainly, we've got this inclining trend line, and this was the third hit of that inclining trend line, which usually produces nice bounces, as what we're seeing here today. Now, the selling pressure on AMD is likely because of the restrictions on certain components being sold over to China, which is reducing the field in which they were able to sell. All the while, AMD is still in a high demand. But if you are a bull on AMD, you have to draw this trend line on your chart to watch when this trend is broken. The trend is your friend until the end. And this trend line has now been hit 3 times, which makes it vulnerable for a breakdown on the next hit. If we move up higher, resistance at 195.02, support still at 157.48, albeit minor, and then another major level of support on AMD down here at 136.87. Next up, Fortinet. Now, Fortinet reported earnings, as you see here today, had a great beat on both earnings per share and revenue, yet the stock got slammed down. Look at this, down 22% on the day. Now you can see here, trend line analysis. We got some beautiful longer-term trend lines, but price caught support before the trend line. Well, wait a second. How did that happen? And the reason is, if you zoom back out on the charts, I can draw it for you right now. Check this out. We got a fib retrace sequence. These fib retraces are so powerful. You'll notice here the 618 fib retrace. We basically dropped straight down, pierced this $71.13 level, didn't hit the inclining trend line. That shows you how strong the 618 fib retrace level is, especially if we have an extended move straight down into it. This is big and powerful stuff, guys. There's a reason why there's times where I tell you it's like a spider web of support, because I've got multiple levels of trend lines and or fib levels coming into a general area. So this tells you, don't wait to go all in at one level. You want to use somewhat of a shotgun approach when I have multiple levels that are close to a potential support area. Enter right above here. enter on this 618, and then also enter here on the trend line if it gets hit. And since it wasn't hit, we already have a couple entries, and look at that nice bounce that we were able to capitalize on day trading today. You can see our track record. Gareth hit a nice win on this Fortinet trade, and currently price is moving up, closing towards the highs of the day. But ultimately, that's how you analyze charts. That's how you figure out how to get a day trade when you're looking at big moves that are occurring on the charts, much like this. They present a fantastic opportunity for you. Next up, we've got Symbotic, SYM. You see here too, Symbotic did report earnings after the bell yesterday. Price action, as we see though, we had a great beat. We had a double beat on earnings per share and revenue. Price action still slammed down to the downside. But if you notice this, what I call a hidden trend line. Now, the only reason I call it hidden is because it's having to go through this price action. But ultimately, I took a pivot from here, connected it over to a pivot back in January of 2025 and strung out that trend line. And you notice when price came up to it initially, price paused, consolidated. That told me that this trend line actually has some staying power. In addition, price broke up, came back, retested that trend line, then proceeded higher on the charts. Again, confirming my analysis on this chart that this trend line was going to be significant should price come straight crashing down into it. And today, what did I do? I saw this price action and I bought it twice. I had in and out 2-day trades within about 3 to 5 minutes on Symbotic. Great opportunity if you know how to draw these trend lines and understand price action behavior coming from an extended move into a really good area of support. Now, the next level of support is a little further down. So watch Symbotic in the near future. Then this close implies we're likely to continue moving higher. But if selling reemerges in the markets, first area of support will be this trend line, but it's going to be minor. This will be a more solid level of support at $45.88. Next up, Airbnb. Airbnb also reported earnings after the bell yesterday. You see price did drop today, but they had a nice double beat. Earnings per share and revenue is up also. But the one key problem with Airbnb is that their international bookings have started to dwindle out just a little bit. Domestic bookings are doing quite fine. So ultimately, investors reacted by selling the stock. First area of support I'm watching is at 116.69. Followed by 109.30. If I scroll back out on the chart, you can see I've got a longer term inclining trend line that originates back here in December of 2022, connected over to the April lows. And that area will be the most solid support for a reattack and reapproach of that price coming down to that trend line. So again, with the shotgun approach, you can just start entering a position here, adding here, and then adding the last little bit at this inclining trend line, which is roughly $104 to $105. Last up, we've got DocuSign. DocuSign today, you see here, took a nice fall off the charts, basically down 6.2% on the day, also confirming a move down underneath this inclining trend line. So that brings us to the next level of support, which is going to be this pivot low. In essence, a triple bottom or double bottom of most recent price action history, which is going to be at $67.30. Now that area should be a minor support, with this next inclining trend line being major support right at $64. So watch both of those levels on DocuSign, especially if we get a rapid price decline into this trend line. Could be a great swing trading opportunity for a near-term bounce back up. All right, guys, that brings us to a close here on Trading the Close. Thank you guys so much for watching. Please don't forget to thumbs that video up, like, and subscribe so you can have these updates sent to you as soon as we do go live. Now, we do have this show Monday through Thursday at 3:55. I look forward to seeing you guys next week. But until then, have a fantastic weekend, and I'll see you on the charts. Take care.
Hey guys, Lawton here with Verified Investing, and today I'm here to talk about Kinesis.money, our sponsor. Thank you to Kinesis for sponsoring us. So Kinesis has this awesome thing called yields, in which you can literally earn gold by just performing different activities on their website and their platform. So the first way that you can earn on Kinesis.money is through their holders yield. So basically what that is if you buy some KAG or KAU from them, which is basically equivalent to gold or silver, they're one-to-one crypto equivalent of gold and silver. you're able to collect money from them, right? A percentage of all of the fees that Kinesis takes over transactions, over buying KAU, KAG, or anything else is distributed to people that hold on to KAG and KAU. So super cool. Now, velocity. The velocity spending is also really cool. So if you spend KAU or KAG, you're actually going to get a percentage of all the fees. Again, this is of all the fees that Kinesis takes relative to how much you use Kinesis. So this is things from going to the grocery store and buying things on your Kinesis card. This are things like buying KAG, KAU, sending it to someone else. And finally, it's the same thing as trading on their platform, right? If you do any of those things, you qualify for this velocity yield. The next awesome way that you can earn with Kinesis is through the referrers yield. So if you refer any friends, family, you'll get a percentage of all of their transactions in perpetuity, which is super cool. They also have a partner for a program for partners and minters. But what I really want to focus on is this KVT, the most exciting part of Kinesis for me. 20% of all of the shares of all the transaction fees that happen on Kinesis are going to be distributed to holders of the KVT crypto token. There's a limited amount of crypto supply, but that's a really cool way to actually own part of Kinesis. You can get in on the ground level and just hold those tokens and collect a nice return. Thank you so much to Kinesis for sponsoring this video, and go check out their website at Kinesis.money.